This conference will now be recorded.
Good morning, all. This is Fatty MZ. It's about 8:30 a.m. On Friday, April 16. As you know, this is option expiration. Welcome to our morning brief. Let's get to it quickly. In terms of housekeeping and stuff, just to keep everybody abreast, we did have a AC failure, and that got fixed. There was too much moisture upstairs in the attic, and so it was tripping off the water manager, for the drain, and they put some extra stuff in, and they assured me that there should be no problem, and they were very embarrassed. It was only a month ago that they put in extra vent here and so on for this room to cool down. We just have too much computers running, and unfortunately, I did not think this through at the time. But this one window has exposure to the sun for a little part of the morning. It's not exactly facing east, and so on and so forth. So you're coming already warm. My fear is if this the temperature is now, what we're going to do in July. So Tico was very upset with me. He was here because I had to go to a major meeting yesterday that went very, 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 very well. But he was here. I couldn't take him. And of course, in the heat. What did I tell you? He's a blonde. He just ignores you. When he gets upset, he just ignores you. Boom. I'm not saying all blondes do that, but this one for sure does. So, all right. Econ. Let's go on to the next issue. Oh, one more housekeeping item. We are doing a webinar this Wednesday. Mike Burke and Mark Esposito, better known as Admiral Espo, they will be there. Mark Burke is a former vice president of Trade Station. He was involved with product managers, initial product managers for Option Station and Radar Screen. If anybody knows those two packages, that's him. Then the next two guys are Fari Hemzi, or I'm not saying that order, Marcus Wasito and Fari Hemzi, because we've gone at it so hard. Trying to understand it, trying to improve, especially on the options section on, because radar screen is one thing. That's a lot of code and all that, but options, you can bring your experience from any other platform. And we helped them over the years, so there's a very good bond between the three of us. We collaborate along with Ken Simmons and Christian Wagner and Mark Caffrey to come up these what was called Happy Expert modules. I did all the coding, obviously, but a lot of ideas came from them, and it was some synthesis. I think it's going to be a good meeting. What we're going to be talking about is these dots. These dots above and below your entry. So that combo you have, here's your entry. The green is the entry after you go to a bubble, and then dots are your stops. You should not go above that. If you want a short, then that's your entry, and this should be your first stop, second stop, third stop. Think of it that way. Depending what kind of pushback or pullback you get, we don't know. Nothing is guaranteed. It's all. That's why you're the human being sitting there. So anyhow, that's what we're going to be talking about. We have a tremendous sign up so far. There is a testimonial on Happy Expert that has not gone out yet. It just sat there. As you know, I haven't been doing well for about a month. Things have been very, very complicated on my end because of psoriasis. Trying to rectify that. The meeting yesterday was good. I feel rejuvenated. I have a meeting tomorrow morning on the V3. In the meantime, we set up a chat room for OTF Lite folks while the V3 is down. We just have to provide some room for people to interact. We have a good team, and over time, that worked very well together. We need to continue doing that. So, was a suggestion by Tony. Thank you, sir. You've been very helpful. Dr. Levin, good morning, sir. Dave Wallach, good morning. Mike Carey, good morning, sir. Let's see, address for here. All right, so let's go on here on the, as you know, Friday the 16th, being Option X, is a very little activity on the econ calendar, but we have housing that came in at 8:30 about 10 minutes ago. Okay, and we beat. That's good on both fronts, both starts and permits. That's all good news. Obviously, mortgages have gone a little. I mean, the rates, treasury rates, which is the benchmark for the actual mortgages charged, have ticked up On the construction, yeah, that will pull back. It makes sense. So on and so forth. So you know how that routine goes. Let's go on to the next item. Consumer sentiment is coming at 10. Let's see what the expectation is. And then we got Kaplan speaking later on twice today. Wow, sounds like New York. Such a good place. They named it twice. And he's a Fed president, Federal Reserve FIB president for Dallas, Texas. Yes, and don't mess with Texas, as George W. would say. Okay, 89 is the consensus, about 5 points, 4 points higher than prior, and we got up to a 92. Wow, the range is wide. Okay, all right, we'll see. We'll see. Okay. Next week is going to be a lot of data. Okay. Again, I'm working on, and this is one of my exercises for tomorrow. I'm working on to put together a composite of a econ calendar for a month, so I know in advance a little bit. And just I really need dates more than anything else, so I know what's stacking. Unfortunately, because of pandemic, as we all know, these dates have not been kept properly. We have a lot of back and forth, as some people have a number of restrictions getting work done. Again, yesterday jobless claims came much better than expected. Yeah, 200,000 less, so that's good. We are at the margin improving. It's not going to go to zero, but that. And the next item I want to talk about is retail sales. Retail sales were fairly decent. Okay, fairly decent. Almost double what expected in one category. The top line, the headline, the top line. But I want to look at always X vehicle, X gas, and holy macro. That's 8 points. That's twice. So those are good. So PPI, CPI should have been gone up, and they have been going up. That creates some alert, but that's a governor. If you think of it as a governor, in a sense that it balances itself out. It's like a governor in a steam engine. You need to do that. Industrial production, another one we want to talk about. Remember, at this time when we talk about that day report, they're not out. This gives a chance to some of the key reports we can take a look at from a prior day. We should do that. That's a good idea. Larry, you should have had that V8 earlier. All right, consensus was 2.8, and it was revised down, and we're at 1.4. So still anemic, but I'm grateful it's not negative. Okay, you got to take the good with the bad. So, and where we went from a -3 and revised down to 3.7 up to 2.7, I think there's still hope. I think we'll pull out of this one. The issue is at what cost? That's scaring me. It's just beginning to really scare. And now they're talking about $50 trillion to fix the climate issue. Oh boy. And I don't want to get into politics of it. I'm just saying we have a lot of expenses to take care of. Okay, big run yesterday again, and I'm into my rope on this short signal. It's just not there. We had a big sanctions against the Russians. Russians answered back very vehemently, and yet market doesn't register that. I guess market thinks everything is good. We'll see. We shall see. 80,000 troops are sitting on the borders of Ukraine. CI is way up. At the margin, CI is dropping. CI diffs, CI diffs are dropping. But remember, tops are very tough to pinpoint. Bottoms are simple. The fear, the greed is greed, brings more greed in. So that's not necessarily easy. But that's where we're in. But I'm just letting you know I'm getting to the end of my rope there on being short. Why? It's percentages. Percentage moves. Historically, I've known we go this far. It may have a lot more to go, and I could get into trouble. So we may switch. I was hoping that we could get a reprieve after Wednesday pullback. And if Thursday was down, then I would say, okay, I'll do a flip over and go up, but go long, but not so far. All right. Let's go to DT, the trenders. Let's see what we're doing here. Okay. This is still gives me some hope. Russell is not moving. You cannot keep going up on NDX with Russell not moving. This actually shows or tells me big names are in favor. That means a lot of big boys are hiding the last the marginal dollars that's coming in, into big names because they're safer, better balance sheet, better products, better management, and the small caps, the 2,000 of them, are performing mediocre. I mean, they're not dropping, but they're not going up either. That's a problem. That tells me the downside has a chance. Still, again, history says, I've been at this some 20 years now on market timing. I mean, I wrote my first market timing code on Apple too. Had to do with Dr. Marty Zwick of you probably guys know that of what do you call it? Lou Kaiser fame, the Wall Street Week on Friday nights, and my dad's deal with me was that if you want to invest some money for me and get your because I was just coming out of college. I mean, I was out of college. I'm saying I was just getting to grad school on the MBA, and he says, "Listen, if you want to apply some of that, I'll give you a little bit of cash you can play with, but be careful." And the other thing is that Friday nights, you want to go out, you go out, but after Wall Street Week, you sit there with me. We're gonna watch it together. I said, "Yes, sir." And with my dad, you couldn't say anything other than "yes, sir" or "no, sir." That was it. Boom, boom, boom. Yeah. And he demanded something from you. It's a yes, sir. You can't say no on that one. So we did that. Now, what that guy did was that said, take the Fed. If you read his book, it's probably a very good read. Should be here somewhere. What you want to do is to take the. Now, it doesn't apply anymore, but back then, you do advanced decline line, cumulative, advanced decline on a daily basis, and then you mark over it. Mark over it like with a arrow. Every Fed rate change for a reserve. So every time FOMC met, if there was a change, you mark it down with it from if they're lowering the rates, which would be not up here, but let's say let's go here. Okay, it would be somewhere in here. They're going to lower the rates a little bit before or a little bit after, or and then up here they would be raising the rates. You write these arrows. The third one was the end of the move. Okay, and you can also see that that's decline starts changing. So one was printed, updated daily, printed, and we took the numbers from Wall Street Week and inputted the Apple computer and came out on a little thermal paper, if you remember, that thermal printer on that. That was my first market timing. It was fine. It doesn't work now because rates are at zero, practically. And so there's not much to move around on the front end. We were back to like 6 or 9 or 8, 7, that area, 5, worked fine. Once we start drifting down into, let's say, about 9/11 period, the response wasn't there anymore for that. So, but I'm saying, so you had to develop other tools to get there. Of course, in 2003, just this piece of software, this one, I was introduced to Time and Digest. I knew, of course, of it, but I never felt that I'm qualified to do that because there were a number of people that Mask and Nancy would know in Southern California. I learned a lot from them, and there were top guns there. I mean, there were 1 or 2 others. There were a series of them. There were maybe 5, 10 of them when we hung out right by Marina Del Rey area. And I never thought I was qualified, but one of my staff members said he did some work to help me with it. He was my trade assistant on options. He helped me there on that stuff. He says, I have a lot of extra time. Why don't I send this Hornet system in? That system alone made us number 11, for sure. And they don't rank you, unfortunately. They're watching you. But informally, they informed me that you come in at 11. And because I was quitting, I just didn't like it. I wasn't in top 10. And he changed my mind. Said, no, you stay, please. You came in first year at 11. I think you have a chance, but you may have to fine tune it, and that's how it started. So, I don't know how we got there, but anyhow, the rates. Oh, we were talking about the rates. So, part of the problem with the rates being high is also Russell. The small, they don't have the market cap. They can't raise as much. There's a lot of debt involved in their balance sheet. You got to watch their debt to equity ratio, all of that, and so they're impacted somewhat here. Okay. we're oscillating here. The rest of them, the other 7 are positive. So that's it, like a scoring indicator. So you have a 7 out of 8 positive, still is positive. So anyhow, SP1 Momo, buy and buy. Again, these are mechanical. I haven't touched them in years. No need to. We don't want. Do not want to. It's not purely the one I click on and go with, but it gives me an unbiased review. And of course, it tells me my mistake right there. You see that, right? I went short here and went long down there. I denied it to myself, self-denial. And look, this happened. Now I'm thinking, wow, it's painful. Now it gives me these two. So, yeah. So remember, your best loss is your first loss. Yeah, I said that the other day in the meeting. VIX. Oh, what happened here? Okay. All right. Now, remember, we've just switched over to M contract on the crude. So let me do that right here. So it's a June, not May. We rolled. Remember, we have to see fairly decent amount of volume over the prior contract for us, for OTF purposes, to call it lead. So we're running M contract now as of this morning. Okay. So, all right. This is the VIX this morning. We're in the channel -1, -2. Believe it or not, VIX has also behaved there, except when it gets fearful, and then you got really, really biggest, fastest spikes with 3, 4, 5 sigma levels. Yeah, we don't get this on indices, but on VIX, the fear index, oh, it shows people panic. So Russell is dropping. Okay, I understand that, but still, in sheer magnitude or absolute amplitude, whatever you want to call it, it's elevated. We should not be at these levels when we are making back-to-back market highs. It just doesn't make sense. We're about 60%. No, I'm sorry. We're about 40% overvalued in VIX. Yeah. This should be sub 10, maybe between. Not sure about sub 9, but should be at least sub 10 in this area, but we're not. So, okay. This is a COVID, what I call COVID premium. I have to call you back. I'm in a meeting. Sorry. People just pick up the phone and call. It's not a barn. You can't just put your head down and come in. Yeah. That's the old saying. Sorry, that's nothing to do with you guys. It's just one of my suppliers. I have an issue with them. I'll deal with it. Okay, 4 sigma hits. I do believe this signal is still good. I do not believe it's gone. Here's what we don't know. What's the catalyst? As you know, when SQ hits up here around 140 and up, and it's near the design limit, that's 148 and a half. Design is 150. What's the value there? 148.11. Okay, hit 148.11. Design is 150, and one time we've hit 150 now. We went over the design limit. How did that happen? I don't know. You got to deal with the new product division of SIBO. And this is probably the most complex things they have done. Very, very hush hush. Yeah. But there was some ideas came from a head of Citadel, Vol trader, Vol trading manager. Yeah, it's an Indian guy, super smart, absolutely super smart. And now he runs his own hedge fund. I hope he's doing good. This is a tough area. This is a tough area to trade vols because of where we are. But anyhow, I'm sure they've had their runs. Look at last year, March of last year. So anyhow, SQ says, as we stand right now, is that we have an event coming, about 4 to 8 weeks forward. Notice that they gave us the event in December, right? The event in December. And yeah, we had a somewhat a drop, another drop. And we're not expecting it to be like last year. Last year was a 7 or 6 sigma event. You don't get that. That was one in 50 years or so, how we dropped. One in 25 years or so. It's just really out there. But now it's rising again as we're heading up. That means that there's a new interest for uh, 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 um, uh, SPX put activity on the downside tail risk. There's a downside, but we have two tails, up and down. This is a downside we're looking at. I wasn't clear in my head in the beginning until somebody straightened my head on that one. That's SIBO. This is downside only. They're looking at down here. What's the activity down here on the puts? Remember, again, SPX, not SPY. Yes, SPX. These are not true. Doesn't happen often. When it does, it's a could be significant, and sometimes it is significant. So it's just a learning system for us. But this is rising. Not to the extent that I would go nuts right now, but if we go up and make an M here, think about 6 to 8 weeks, maybe 10 weeks forward, something's happening. Now, at that point, you got to go on the watch and say, okay, what's on my watch list? I'm talking about mainly macro events. What do you think is going to go bad there? Is it the Fed? Is it earnings? Is it crude? Is it interest rates / Fed? Same thing. And also exogenous news. So we'll see. Nothing so far that we can see, but all the time in the past, when we gave that signal, there was nothing on the horizon either. Sure enough, we got hit. So, it's like torpedo on the bow, but then multiple coming at you. Yeah. So, okay, rendezvous point, still moving forward. Stock RSI. They're just the same indicator, but with the three different inputs. Haven't touched that. Holy macro! I haven't touched that since I wrote the code for it. The code is open source. I used that to develop CI because I knew what was wrong with this. To put the CI together back in 2002, but I think it took me another couple of years, maybe after that, for some free time. I put that into a code, and we've been tracking it. These three lines, when they converge, they set up an event. And so we call them these. It usually happen in these areas, of course. Either on the high side or downside. We call those rendezvous points where they have to take because they're going to go at different rates and same direction, but different rates, the rates of speed and the slope. So we want to see how close they get together. They never get there at the same time. You can always see that. It's just the closest we get. This was probably the closest of all, but it was not in a heavy overbought area, and thus the drop you had was just for 3 days. But there were strong 3 days in January. Yeah. Of course, this is GameStop. This caused a lot of problems, which I'm not going to get into right now, but we may get into it on Wednesday. Yeah, this actually it was an eye opener as being a student of block trades. This was an eye opener because inside of those days we had blocks coming from everywhere. So everywhere. I mean, that was just the system had never seen so many blocks. But it happens when things go chaotic. Treasuries. Remember, guys, we try and keep this short. We will do regular webinars every so often, but we're trying to do this every other day, so for our people. I've not invited anybody from outside yet because I haven't felt good yet since coming back from this psoriasis issue. But maybe next week. All right. Maybe next Wednesday. Yeah. I simply will post on Twitter and our MSA list. Very neutral here. We haven't done anything for about a month now on the front end. We have pulled back somewhat on the long end. Cars, mortgages, long-term liabilities like pensions and so forth. That's what these things are benchmarking for. So we're not out of the woods. The problem is, actually, I don't mind the long end to go a little bit higher. That would be a good indication. The front end, I'm very scared about because that's interest expense on national debt. It's not a joke. And we've got to get that under control. We have to. Morning, Jack. How are you, sir? Okay. All right. Last but not least, let's go here. Okay. I'm speechless. I am. I'm speechless. just up and up and up and up and up. I mean, it's like a balloon. You can't leave the stratosphere. You only go up so much. So it keeps on going, and the 100 is a wall. It's at 96.4 now. If something goes wrong here, I want to say for the record right now, I pray for everyone. If something goes wrong here, it's going to be big as we keep going. So now, fundamentals are strong. There's a pent-up demand. We're opening, but I want to do it safely, and I don't want to do more and more shutdowns. So 6 months from now, shutdowns. You know, last night the Pfizer CEO said that a year from now, people like me should get a booster shot. That will be coming. So it's a third shot, a year after your second shot. So, all right, I'll go and keep the card handy. And I don't know why they don't do passports for this. We got to do that because we're just so vulnerable right now. That's my whole fear up here. So, but I think we have adults in the room. Things are more orderly, and you can see the results. You can see the data. You can see the hospitalizations are dropping and so forth. We just have really some cuckoos out there where they don't realize science or data. But again, all of this bearish divergence was taken out by price. Once this result came in, once this drop culminated for a small drop. Look, all this drop for a small drop there, and then we're shooting up again. Again, this is number of 200 days, number of stocks of S&P components that have they're trading above their 200 day, and we're just up there. This is very easily recognizable. This usually isn't, and it's just it's the highest I've seen. It's the highest I've seen. Okay. All right. Overnight. What do we do overnight, Jack? Hold on. There we go. Okay. Here's our 30 minutes overnight. Again, you see, what time was this? 5, 3. Okay, that's 3:30. Okay, so Europe closed. I mean, opened. I'm saying Europe opened right there. This area. No, that's it. That's at 3 o'clock. So because it's the timestamp and trade station is the end of the bar. So that's Europe closed, opens up like yesterday. If you go back, you'd see. As a matter of fact, that was part of the discussion yesterday we had for lunch, working lunch, was that. By the way, I had the best pastrami this side of Mississippi. It was awesome. I'm not supposed to have meat, but hey, if you don't cheat, how you gonna? Sometimes rewarding yourself includes some cheating. Yeah. Okay. That's a pretty good jump, and that's what we talked about yesterday too. That these boys in London set our pace, and they sure did today too. Oh, all right. Why 30 minutes? So some of you are new with me. A lot of large money managers do not go in there and trade short term. Yeah, they may have S&P trade on, but just letting it go. They're just watching it. They get a bias and they hold on to it. They have deep pockets. They give themselves a cushion and they hold on. But this is what they watch to just get a sense of where the tempo is. And right now, for the time being, it's up. What we're going to talk about on archives are posted. Notice we already changed to M21. Tonight chart will be M21. And then 1 second, let me check something else. It just hit me there. 1 second. There's a chart. Did we? Yeah, we post. Oh no, we haven't done that. Okay, I'll update that today. Okay, got it. Sorry, trying to make sure you guys are updated. Again, Wednesday we're going to be talking about this in some detail. The bubbles. Remember, these are the bubbles. Basically, start with the DMZ. We added bubbles, which is movement of the price throughout DMZ, and then we added the ATR, and we kept that variable. Right, as I was going with Admiral over the week yesterday, of how you can decide what kind of a tolerance you'd like to play, and leave it there. I will present to you what I use and why, but it's not hard coded. It's soft coded as an input. You can change that. Okay. Hope to see you there. Don't forget that the post is the emails went out, and no, hold on. We have this is a block there. This is what some number of people have signed up so far. 18. Okay, it was early. Now we do have I think Phil Hutton, who was doing everything else. Oh, look at that drop. Look, remember, bubbles, green bubble, red bubble, and look at that cross coming. Look at that. Yeah. All along you knew the peak had already come. You can see that. He has a tremendous testimonial. Again, we don't do anything for testimonial. We do not. There's no quid pro quo for testimonials. We will only advise you on your grammar and spelling. The words have to be yours. Hero the Magnificent. Testimonial, we haven't even posted it. This is, I think, February or maybe early March. I just haven't had a chance to send it out. I've just been sidetracked here with health issues, and which probably is my problem. My problem is I'm having a hard time falling asleep. So once that goes away, it's a problem. Now I'm regaining it back. Let me stop the recording here.